Hi, I'm Jan Scholes from the Real Asset Company. Today I'm joined by Detlev Schlichter, author of Paper Money Collapse. Thank you very much for joining us.
Thanks, Jan.
At the moment there's quite a lot of debate about whether we're going to hit hyperinflation or deflation, something which you've talked about quite a lot on your blog. As far as I can tell, you think we're more likely to hit hyperinflation than deflation. Perhaps you could just explain why you think.
I think I can understand the deflationist argument because it's very clear that after 40 years of fiat money expansion, we have accumulated so many imbalances that if we stop printing money today and if we closed all the central banks today and allowed the market to cleanse the system of the accumulated imbalances, I do think a lot of prices would come down, and I do think we would have a deflationary correction. So the market forces in place are certainly pointing towards deflation. I can see that point. And I think one of the reasons why we again and again go through periods where price levels or measured inflation seem to be behaving very calmly or can be portrayed by the governments as being under control is because of these deflationary forces that are still there. I think the inflation, why I expect inflation to be the end game ultimately, is for political reasons, because you have these market forces, but then you have the political push against it, the idea to not allow deflation. We are now being told every day that deflation is something that should be avoided at all costs.
It's just around the corner.
Exactly, it's absolutely dreadful, which I think is a complete misconception. I mean, obviously in a stable commodity money system, we would have secular deflation. It would not be a problem at all. It would indeed allow the economy to function much better. And the kind of corrective deflation that we would have in a crisis that was allowed to unfold, such a corrective deflation would be painful but ultimately necessary and a process by which the system gets back into some form of balance. So I do think a deflationary correction would not be a happy event, but it would be.
So it's necessary.
It would exactly. It's necessary. But because the political will is there to lean against it and to print money, and we are also constantly be reminded that central banks can print as much money as they like. But I think there's another point here, simply that certain entities cannot cope right now with a credit correction, and these are the banks and the states, the sovereign states, because they are dependent on constant credit expansion. They are dependent on funding their deficits. The states obviously now are in desperate need of constant funding at low interest rates. A deflationary environment or a credit correction, which credit would stop expanding, and no more money is being injected into the system, would be disastrous for state finances. We now are in a situation where most central banks are the largest marginal buyers of the bonds of their governments.
Yeah.
And this is practically a Weimar Republic kind of situation that we have globally. I mean, the Bank of England is the largest buyer of gilts, the US Fed is the largest buyer of treasuries. So for if these central banks would suddenly decide that they were happy to allow deflation and stop printing money, then we would have that correction, but it would also mean that they would bankrupt their governments. So that's why my view is that politics will lean against this ever more aggressively, and I think there is only then a key point at the tipping point is where the public loses confidence in that system. So the short answer to your question is that market forces are pointing towards deflation, but politics is pointing towards inflation.
And I suppose inflation is a more guaranteed concept than the potential deleveraging or the fiscal austerity on the other side of the coin that would push it.
Yeah, I mean, as I say in my book, all paper money systems, all fiat money systems have ultimately ended in failure. And failure always comes in one of two ways. So either you keep printing ever more money ever faster until the public loses confidence and you go into a hyperinflationary disaster. The other outcome is at some point you realize that you don't want to go there and monetary authorities stop printing money, allow a correction to occur, and go back to some form of hard money, so usually return to some kind of commodity standard. So these are the two options, and I think you can see conceptually with an economic analysis why there are only these two outcomes. And I think if you look at the current situation, we again can see that these two are conceivable. It would be possible to stop printing money and go back to a hard money system. It would mean a sharp correction. It would mean that quite a few banks would go under. It would mean that probably a couple of pension funds would go under or have sharp losses. It would certainly mean that a number of states can no longer declare themselves solvent. I mean, to be honest, I think many of these states are practically bankrupt anyway.
Yeah.
They're just hiding it by printing ever more money. So I think it would just be, we all know that they will never repay their debt. It would just bring the obvious, out into the open. So it's still possible to do this and stop printing money. I just think that nobody has the political will to do it right now, and I think it's getting ever more difficult because the more money we print and the more debt we dig ourselves in ever deeper hole. But if you look at, for example, after the Civil War the Civil War obviously ended in the 1860s, but in 1879 the United States went back from the greenback system to a gold-backed system and joined Britain on the gold standard. There was a period of deflation. It's quite marked deflation in the United States. Interestingly, at the time then, it coincided with strong economic growth. Now, I think if we did this today, we would go through a sharp recession first. So the possibility is there. I just don't think that politicians will take it.
So fiat money and an inflationary system is very much to the benefit of governments and central banks, as far as I see it anyway. And I think that I can see this, we're just losing the democratic nature of our economies that we have today. And I think we don't see that any more than we see it in the EU. That's exactly how we see it in the EU at the moment.
I think you're right that it's certainly to the benefit of the government because it can manipulate the economy and stimulate the economy. And historically it was even more clearly the case that all governments introduced paper money to fund their government spending. I mean, in previous rulers didn't even make any pretenses, they just openly declared it. Today it's a bit more complicated. But yeah, the state is a beneficiary of the fiat money system, so are the banks. But I have to say that I think these benefits won't last. We see right now that yes, being able to be a money producer and lower interest rates and benefit from the fiat money franchise has allowed the state and the banks over the last number of decades to become ever bigger. But we know there's an end game here. So although they are beneficiaries for decades, ultimately they're also they lose simply through the inherent contradictions of the system. They can't escape that. So they will not be winners forever. And this is ultimately where the system will end. As to the democratic process, I think there is now a lot of talk in Europe with the financial crisis in Europe about democracy. I have to say that, I think most people see the democracy issue in a certain light because what they're concerned about is that now decisions about economic policy, let's say in Italy or Greece, are no longer being made in Italy or Greece, they're now being made in Brussels or in Berlin, or by unelected and by bureaucrats and so forth. I agree that that is a problem, but again, looking at the economic drivers behind this, it's very clear that by just shifting the economic decision making back to Greece or Italy, they know they maneuver themselves into a position where they have no maneuvering room. They certainly have empty coffers. They have no money, and I think the reason why they are presently willing or accepting the fact that they put their hands in other political leaders is simply that they hope that they're going to get money from other sources. The whole thing is a complete disaster. So I'm very pessimistic here. I don't think there is any. Too many of these countries have big fiscal problems. There is no way they can be bailed out by the others. It's a club of bankrupt and semi-bankrupt states. And the idea that the semi-bankrupt bail out the bankrupt is ludicrous. So I think there's a whole charade here where people are just buying time, and why we have all these political debates going on and all the discussions about what happens to Greece and if they're going to pay the next coupon or not. In the meantime, the ECB is printing money. The ECB expanded its balance sheet by about 20% last year. No, more than that actually.
I think it's tripled since ECB was created.
Definitely. Yeah, it's pretty much exactly. The ECB's balance sheet was about 800 something billion. I think when the euro was introduced, we're now talking about 2.7 trillion. As a share of GDP, it's larger than the Fed. The Fed is about 20% right now of the US economy, and the ECB is about 30%. Yet this morning in the newspapers we read again everybody wants another $1 trillion of quantitative easing. The ECB will do another liquidity injection in February, which will mean another 500 billion and 1% unlimited credit to the banks. I mean, you look at these situations, you see what is being done is the problems being kicked down the road. The bailouts won't work because nobody has the money to do the bailouts. So the last line of defense is to print money, and that's what they're doing.
And how long, and this is a bit of a mean question, but how long do you think they can kick the can down the road for, as it were?
Yeah, I think my standard answer, I gave it a couple of times in interviews, is to say 2 to 5 years. And that doesn't mean that we're going to be safe for the next 2 years. For all I know, it could happen next month. But what I'm trying to say is, you see sometimes people look at my argument and they say, Detlev, ultimately you will be right, but it will be another 20 years. Right. That I don't think is likely. I don't think even another 10.
So I think history demonstrates that it's not particularly likely either to drag on for another 20
years.
Yeah,
exactly. And I think the problems are just too big now. And just looking at the sheer madness by which they're now, I mean, even what I just said, to even talk about central bank balance sheets being 20%, 30% of GDP, I mean, we have to remember, when I worked in financial markets, let's say 6, 7, 10 years ago, and we had told people that the major central banks of the world are buying trillions of their own government's bonds. People would have said, no, that's been done, I don't know, in Latin American countries in the 1980s, just before the IMF moved in and bailed them out. Yeah. It was crazy. It was some Weimar Republic policy. So now it's being presented as the last tool in crisis management. So it's absolutely bizarre. So that's why I say 10 years, I don't believe we have 10 years. Something big will happen over the next 5 years. So I say 2 to 5 years, where I say it doesn't have to be next year. You never know. Sometimes they can drag out the system for whatever reason longer than I expected. But I don't think we have 10 years. So the next 5 years, I think something big will happen.
And talking about sort of in the future and things, at the moment in America we're seeing a hot race to become the Republican candidate for the presidential elections. And 2 of the nominees, Newt Gingrich and Ron Paul, have mentioned a return to the gold standard, or at least sound money, in their speeches. If they were to be elected, do you think that the world will follow in their footsteps in a move to return to sound money?
Well, I certainly think that if one of the big governments, and certainly the United States, would seriously consider going back to a gold standard, I mean, I think it would be that would obviously be a major event. I mean, I have to say that I consider it still very, very unlikely. I don't have much hope in politics here. And I'm not quite sure what Newt Gingrich's motivations are. I never met Ron Paul either, and I don't. But obviously with Ron Paul, he has a very, very consistent history, intellectual history. I mean, he's been saying these things and stuck to these views for decades. I mean, I recently met somebody who met Ron Paul in the 1980s and came through the Austrian school and through gold standard views through meeting Ron Paul in the 1980s, in the early 1980s. So that tells you how convinced he has been, and he's always had this line. So with Newt Gingrich, I'm not so sure how much of that is tactics, and we have to see. I think clearly the political establishment, the financial establishment, Wall Street, I think there will be a lot of people who will be against it. And
of course they're funding the election.
Exactly. So we have to see. But Steve Forbes said something similar, I think, last year. I remember 2 years ago, even the head of the World Bank made a comment about the gold standard. It was quickly shot down. So I do think, I would say, put it like this, I don't have much hope that it comes through to the political process. I think chances of Ron Paul winning are very slim. And so therefore I think what we will see the crisis will intensify. And I think now by that people start talking about gold, and people hear from Ron Paul, and even people like Newt Gingrich pick it up, I think this debate will continue. So I think the importance of gold and hard money, I think more and more people will realize this as the crisis intensifies. So I think all of this is important, and what Ron Paul is doing is important in terms of changing the debate. But I don't think it will be the political process this year that we need to change.
So you think it's going to be a bit more of a bottom-up approach, that the people down underneath the politicians are going to be turning their face towards gold and looking for a sounder asset to put their money into?
Absolutely. It's sort of, libertarian populism or something that's going to change it, yeah.
Because I think, well, today it's Chinese New Year, and we've seen record gold buying activity from the Chinese, and I don't think they're just doing their New Year's Eve shopping, because of course they traditionally give one another gold, but also the Chinese government obviously buying a huge amount of gold, but as are central banks, they're now become net buyers of gold. So one does wonder if there's something going on underneath the surface.
I think certainly, I think it's spreading, and I think even, Alan Greenspan, I think even when he was the chairman of the Fed, he said once in a testimony, he said, in extremis, nobody will accept paper money, gold will always be accepted. And I think that's another point you made there about like China or India. See, gold is an established form of money, and a store of value around the world. It has a very peculiar history, of course, and it's not something that is tied to any kind of government or political institution. And I think people are rediscovering this. Yeah, I think I'm hugely bullish and positive on gold, and I think more and more people will realize that we have to base our monetary system on something different than promises by central bankers.
Thank you very much for your time.
Thank you.
Thank you.